Greetings, everyone. I'm excited to welcome Roy Pereira, CEO and co-founder at Unified.to. Roy, welcome to the show.
Hey, Ben. Nice to be here.
Yeah, great to have you here. Let's dive right in. Tell us a little bit about your background.
Sure. I've been in tech for quite some time. I took computer science in university and couldn't wait to leave. So I actually dropped out and did a startup like everyone wants to do, except my first startup failed miserably because I was a computer science guy and I had no idea how to run a business. So after that, I just went through and joined a bunch of startups, learned as much as I could. I went down to Silicon Valley, worked there for a while, all great experiences. Worked in publicly traded companies for a while. That sucked. I lost all my hair and then came back to startup land. And I've been there for about three startups so far since then.
Okay, yeah, appreciate that background. So, kind of that startup journey yourself or at other startups. So, yeah, tell us about your company. Tell us what products and services Unified.to offers.
Sure thing. So I've always been doing software and mostly B2B software. And we've always had to integrate into other SaaS applications to get our customers' data so that we can use it in our application. Examples would be sales data from a CRM if we were dealing with salespeople. And so we've always been building these, what's called API integrations, very technical. Our engineering teams would always build these and then we would maintain them because let's say Salesforce changes its API and everything breaks. And so it's quite costly for us, timely. It took a lot of time. And so for this company, I really thought that I wanted to build a product that actually did that for other SaaS applications out there so that they didn't have to waste their time. And that's what Unified.to is. It's basically API integration infrastructure. One line of code, you're basically done in an afternoon and you don't have to worry about it. So it saves SaaS applications a tremendous amount of time so they can launch faster. They don't have to waste their developers' time to build and maintain these things.
So interesting. And is it, say, any type of application or focus on different, right? So many different applications. Maybe it's MarTech or CRMs, but is it like any
Yeah.
focus? Like where would you start?
Sure. I mean, we did start with sales and then we added recruiting, like so for applicant tracking systems. And then we realized that what we had built was really a modern take on this old problem that's been around for since SaaS, basically. And so we expanded it out to a ton of verticals. And so right now I think we have 17 different verticals and, accounting, e-commerce, and file storage and task management and so forth and so forth. So we're trying to get all of the B2B SaaS use cases.
Okay, so 17 verticals. And one thing, some it's like easy to get going with your application since my developers writing that integration and then maintaining that integration. Tell us a little about pricing because do you see companies that start with integrators, but then maybe it's based on usage based pricing and they're like, boy, this is getting to a price point where I'll just develop this in house. So how do you see that pricing and that evolution of people using APIs?
It's a good question. I think previous solutions with older technologies had to price it a different way just because there was a lot of inherited costs that they had. Because we're leveraging very, very modern architectures, our cost structure is radically different. And so we decided to use usage based pricing, which you mentioned. I think that is the standard for infrastructure. In fact, actually, it could be the norm for SaaS in the future. That's a different topic. So infrastructure for sure, AWS hosting, it's all about usage, for example. So that's what we do as well. We're infrastructure, we're plumbing. Nobody sees this except for the developers at our partner companies. Um, but we do have a sliding scale. So as you use more, you're actually paying less per unit. So it's a volume discount, if you will, if you think about it that way. And so that allows our customers to stay. There is no point where it is cheaper for you to actually manage this internally. We currently have 221 integrations. That would typically take you a lifetime to build if you added up all the man months or the person months to actually build this out and then to maintain. I mean, it would basically kill you for technical debt.
Yeah, it's interesting. It's good to hear because as a SaaS CFO, if we think about say DevOps costs and that's hitting COGS, and if we're trying to hit that best in class gross profit of 80%, there are only so many points to give up within COGS. So
Mm.
if it's like, hey, this API, this integration is now costing us more and more because they're not, and our app is taking off and we're using more, API calls, whatever it might be, that it can also scale as that company scales. So it doesn't, eat up more of COGS over time.
Yeah, just to geek out on pricing models, because obviously I'm a technologist. I love tech. I am very technically minded, but I'm also an operator because I started 5 different startups. And so we were building this for us, as the target customer. And with my CEO hat, I was like, how many points is this going to take from my profit margin if I was a customer? Because that's, as you said, that I would watch that. And so we had to figure out a pricing model that actually worked. And none of the pricing models that we found in the industry made sense. And in fact, we actually interviewed a lot of CTOs, and they said the exact same thing. And so we knew that that was an issue. And so we changed the pricing model to more based, but we also changed it to a sliding scale down. And we always had this calculation in our head and in our spreadsheets about what's the profit margin. If they have 100 customers, what's the percentage of the profit margin that we're eating? Because we didn't want to be overly onerous on that calculation.
And yeah, so that's really interesting to hear as a CFO. And tell us a little bit about your ideal customer profile. Like, who is a great customer for Unified.to?
Yeah, we obviously have quite a lot of startups in our portfolio of customers. They understand that they need to get to market quickly and they don't have time to build and maintain all of these integrations. And so rightly so, they're thinking about us as infrastructure Lego blocks, if you will, right? But we also get quite a lot of midsize and even some larger companies that come to us building their second product or third product. And they've had such problems with, their first problem adding integrations and then maintaining them that they don't want to go there. They know they don't want to go there. There are still some tech leaders that insist on building it internally. But that's less and less. It's very similar to, in fact, hosting, right? So hosting came about 20 years ago. We don't think about buying a desktop tower computer and then plugging it into a closet and then maintaining that software. We just don't do that anymore. And so it takes a little bit of time for the mindset to shift. We believe we're like this. We're like hosting. We're like payments. You don't build your own payments. You just use Stripe or something like it. And so you don't really want to build integrations. Developers don't want to do that. They don't maintain that. It's not core to your functionality. And in this day and age, when it's so easy to build anything with AI, you really need to get to market and you need to build those core features that your customers want. Yes, you need data, and that's where API integrations come in, but it's not core. It's what you do with that data that's core and it'll differentiate you.
Yeah, no, yeah, appreciate that insight. So yeah, like you said, we could talk pricing forever, but yeah, it's yeah, interesting. You also, right, as an operator, thinking about how that impacts, when you're developing these and impacting your COGS and gross profit. So let's talk some stats and figures. What year did you found Unified.to?
So we were founded in the worst quarter for fundraising in 20 years, which is Q1 of 2023. That was actually, sorry, Q2
Hmm.
of 2023, first half of last year. And we started out and, we're multi-time operators. My co-founder and I had multiple exits, successful exits, and it was just horrible for fundraising. So we decided, we're going to have to do more with less. How do we do that? We automate as much as we can. We build a next generation platform that sort of automates itself and maintains itself. That made us a better company, made us a better product. Our cost structure is a massive differentiator in terms of competitiveness because we had to make those hard decisions.
Yeah, yeah, no, interesting. And do you have a headquarters location? I know it sounds like you're located in Toronto.
Yeah, we're located in Toronto, right downtown, about basically a block away from the CN Tower. If you're up on CN Tower, you can probably throw something at us.
Okay, all right. So in Toronto, and what's your current team size?
So we have 8 full time today. We're actually looking at expanding next quarter as well.
Okay. And anything you want to disclose as far as ARR or scale of the company right now?
Sure. So we've gone above 50 customers that are on our platform, launched and very successful and happy. We have still a 5-star rating on G2 Crowd, which is amazing. Everybody talks about our great support, obviously our great product as well.
That's great. And then tell us, how are you finding your customers? Tell us a little bit about your go-to-market motion.
Yeah. So right now it's all inbound. We decided to focus on inbound and focused on both developers and product managers who are looking for a solution. The outbound motion is an interesting one as well, obviously for larger customers, but it is not as efficient. In fact, it's very inefficient compared to the inbound, which is more timely. These individuals are looking for a solution. They have uh, an itch to scratch, if you will, at that moment. And so we bring them in both from paid, but also from SEO, inbound, organic.
Okay, that's going to be my next question. How do you generate that inbound interest? So paid in SEO. So yeah, that's great. Love inbound. So, and let's switch to the fundraising side. How much capital have you raised to date?
Yeah, we've raised over 1.4 actually. We actually just closed a new investor just today. So we haven't raised a lot of capital, if you will, compared to my previous companies. We are still early stage, I would say. So we will be raising additional capital actually in Q1 of next year. That is our plan. But we've done quite a lot with a small team, like I mentioned, 8, with a small amount raised compared to our competitors in the space. We've raised 1/50th of what they've raised. We probably have 1/20th of the team size, and we've built a product that is much more feature rich, 220 different integrations across 16, 17 different verticals, which is quite unheard of in this industry.
Yeah, it's a lot. And so 1.4 million, is that Canadian dollars?
Yes, that is
Yeah, okay.
Canadian dollars.
Okay, so 1.4 million Canadian dollars raised to
It's
date,
about one US
one-ish.
today
Yeah.
at today's exchange rate.
Yeah, at today's, yeah. And then what, maybe I don't know if that was multiple or one round, but like what triggers or milestones led to the capital raise?
Yeah, that's a really good question. So we have done it in a few, I would say even called tranches. It's very opportunistic. Yeah, I've raised a ton of money in the past with different companies. At the beginning, you're doing maybe an angel round, a pre-seed, sometimes it's called. The names around funding rounds have sort of changed a little bit as the amounts and criteria have changed. And obviously, we just went through a massive upheaval during the lockdowns, COVID lockdowns with SERP and all that. And so that was a little weird, a little odd. There's a lot of other adjectives you can use there. And now it's sort of coming back down to normal pre 2019. And so, the $1 million is sort of, it is almost always now on a safe. It used to be on a convertible note, a convertible debenture, but it's really around a safe now. And so that's what we've done. And so there is no opening or closing of the round like there is with an equity round. This is just finding individual investors, small cap VCs who are interested in providing them a safe agreement and then having the funds transferred.
And then for the other SaaS founders listening right now, any lessons learned in that process, say about a year in raising, over 1 million in capital?
You know, I always say that it's never easy. I've raised multiple times, different phases and so forth, but it's really never easy. And you do have to literally create a list of 100 and you have to do your homework in terms of who you want to go after. I typically go into different industries. So I'm almost starting from scratch. And so I need to find the investors who like that industry, who like that problem space, and obviously who like us. Early stage is 90% about the people. And so, yes, I do get repeat investors, but a lot of times these investors need to invest in what they know. But, and so you have to find new ones. And that means you just have to do your homework. You have to go through a list. You have to go through a ton of no's. What I always do is, even though I get a no, I will keep them on my mailing lists. I'll actually send them monthly. It's monthly investor updates, so-called investor updates. Most of the people there are non-investors, potential investors, future potential investors. And some of them do come back and say, you know what, you've done an amazing job at growing your company. I want to come in now. That's happened multiple times. And so it is a relationship, a long-term relationship. A no doesn't mean no, but it usually does mean no. So you just move on. If they're just not the right for you, they don't understand your problem space. Maybe they don't trust you. They don't think you can do it, whatever. There's a million reasons. Just move on. Don't think about it. There's plenty of other investors in the sea.
Yeah, and I appreciate that insight because that just came up in a previous founder episode of just those monthly investor updates. So important to do that right, even with those investors
Yeah.
not on your cap table.
I used to do that quarterly and it was really hard to do quarterly. And then for this one, I really pushed myself and I said, you know what, I'm going to do it monthly because I want things are moving so fast that a quarter is just too long. And it's really pushed me to be disciplined. And I get a tremendous amount of feedback from lots of non-investors who say they love getting my updates. It's a really good insight into the industry that's happening. We talk a lot about AI because most of our customers are AI first SaaS companies, and that is massively restructuring SaaS altogether. SaaS as we know it is about to massively change. And so
In Yeah.
they need to know that. And so we're like front row seeing this change in real time. And so that's what I also add into my updates.
And then, Roy, at this stage of your journey, do you have a favorite number or metric that you're focused on to guide the business?
Yeah, for us, we talk about metrics all the time, KPIs. We talk about customer journeys all the time. I basically dictate that everyone in the company understands what portion of the customer journey they work on and to understand what's before and after them, and then what the KPIs are for them and what they can do to influence those KPIs. And so every week we have a meeting on Mondays and it's like, which ones are we experimenting with? And what do we think is going to happen there? And let's check on what we did last week. And so my KPI is obviously different than everyone else's in the company. I look for obviously revenue. I look for time to close. I think that's an important metric. You know, when they come in, the customer comes in, they're interested, they're looking, they go through various phases of trying to figure out if we're right for them. And then once they commit to us, how long does it take for them to launch and be successful? So I think that's a very, very important metric for us because there is quite a lot of options out there, right? And they don't know potentially all of the great stuff that we have because they don't have enough time. We're not their number one priority in life, right? Getting home and feeding the kids, maybe. But so they don't have a limited amount of time and we have to make them understand that, yes, we can solve their problem.
Yeah, it makes a lot of sense. And then, Roy, appreciate your time today. And as we wrap up, what's coming up next for Unified.to?
Well, we'll continue adding to our vertical support. We have several new categories of API integrations coming out. Obviously, we'll continue to add integrations. So we have 221 today. We will continue to add. I want to get to 500 or so by the end of next year. When with our platform, I believe we can definitely do that. We will be raising again, as I mentioned. We have a short list of VCs that we'd like to work with, that we've been nurturing relationships with. And so we anticipate that that'll be by the end of next quarter, Q1, March of next year. And
Okay,
that
so
will
add
just
more.
allow us to grow the team a little bit, mostly around customer success, around GTM, but obviously accelerate our growth. We really do believe that the solution that we have is unlike anything else that came before it. And so it's mostly an execution play for us to get more customers and more market share.
Okay, so add verticals, integrations, grow that CS team, GTM team with another raise. So looking forward to that. So Roy, really appreciate your time today, sharing your journey. If listeners would like to learn more, where should we send them online?
Really easy, unified.to is our name and domain.
Perfect. So if you'd like to learn more, check out unified.to. That'll be in the show notes. And again, Roy, really appreciate your time and sharing your experiences.
Thank you very much, Ben.
Thanks.